could be your sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up, guys? Hope everyone is doing well. In today's video, as I mentioned on my community tab recently, it's just going to be a Bitcoin only update. It'll be a rather quick video as compared to my recent videos and just my videos in general, typically being of the longer variety. Let's go ahead and get it started here. The two charts, I'm going to be going over just two charts in today's video. So the first one's going to be this weekly chart that I just put together last night. What I want to get across is, first thing that I want to point out is, let's just go back a little bit, is going to be this black, so these two black trend lines and then this white trend line. I just wanted to point out that it, at least the white one, goes all the way back to the top of the second super cycle or super phase, whatever you want to call it, in November of 2013 when Bitcoin topped out around 1200, comes all the way up and runs about halfway through the most recent phase one of the current cycle 3 that we're in for Bitcoin. It also runs through this final little pit stop, I'll call it, right here, right before we made the top in the phase 2 of the previous cycle 2 of Bitcoin, leading into the high of 2017, around $20,000 approximately. But the first trend line that I used was this upper black one right here. It is mainly just taken with regards to the slope right here being obviously very important, when we collapsed right here to the bottom of 2018, 2019. And then also it is essentially just lined up with when we collapsed from the March crash, or February into the March crash of 2020. You can see here each of these bubbles are just kind of generally pointing out points in time when we came into contact, just some sort of entangling of the price around the more predominantly the two black trend lines. Originally I wasn't going to have that white dotted one on there that you can see, but I added it because that was, if I did, it's what touched it, the 2013, the second 2013 high that I just got done going over. But what I want to point out is, more specifically, is if we take a look at these green arrows, you can see we came into contact with it right here. We got a massive dump. And that, like I said, same thing for March, and that is essentially what I think could be possible if we end up losing around 20,000 for Bitcoin. Obviously, nothing happened right here. I mean, it could have been a possibility right here as well, going back around October, November of last year, and we could have, dumped all the way down to the, at worst case, $10,000. Then 12 to 10,000 is basically the price target if we end up losing 20,000. So I mean, if we zoom in here, you can see currently, if we just take away all of these drawings, we are sitting with our lowest wick here again on this weekly chart around 25.7 thousand. Currently the body of the candle sits at 27.5 thousand. But if, like I said, we come down to 20,000, as I mentioned in my previous video, I think more likely that the price, if we haven't already met the local low before we continue to go up to whatever price target happens to be next, I think 23 to 25,000 is a very constructive retracement range. Worst case scenario, as I mentioned, I think 20,000 and 20,000 really only being some wicks. So I mean, like I said, if we start to really get our candles, the body of the candles, to 20,000, and especially if we start to close on, I would say, around no lower than about the daily at this point. We start to close daily candles below around 20. I would start to really kind of cut it off around, personally, 20.5 thousand, just to be safe. If it starts doing that, it's likely not going to be very good. I mean, if it does start doing that, we're going to start closing candles below this support bubble right here that we set from around January of this year to March, very beginning, early March, first week of March this year. Although, technically, we could just as likely come down and test around like 19.7, 19.8, and then it just as likely bounce up from there. I mean, for example, let's say that we do end up doing that. And I mean, it could end up looking something like this. I've been talking about the megaphone pattern recently. I mean, if we do that, then we would basically see something like this. And I mean, we could just as likely then end up bouncing upwards. Um, but realistically, I don't think if we end up coming back down that low, overall it's not going to be good, which is why I wanted to get this update out here quickly, just in case it does happen rather fast. As I did mention, I believe either we are right here in this bubble according to the whole phase cycle theory system that I go over on this channel. I'll have, if you're new to the content, first card linked in the video will have me in depth going over that. I needed to put up the part 2 soon. I may go ahead and actually get that recorded today sometime after this video, or I might end up including it in this video if I feel like it whenever I get done explaining this. But let's say that we do indeed end up losing 20,000. Then as we can see down here with our purple trend line range, the dotted trend lines, you can see it goes down to 12 to, like I said, 12 to 10,000 would be the next area I think is most likely. It would end up falling through with this price pattern right here. As I mentioned in one of my previous videos some time ago, this isn't an orthodox, no textbook trading pattern that I've seen anywhere. So I suppose if you want to take it with a grain of salt, you can. But if you just go and look on many different charts, whether it's cryptocurrency or even other forms of markets, you can typically kind of see this play out. But the way that I refer to it is, so this green and this purple, an inverse bull flag. This one would be specifically of a bullish megaphone variety. So if I just go ahead and move it over the actual price here, if we do end up losing 20,000, I believe we could likely end up seeing something along these lines to where we would come down to worst case scenario around 12 to 10,000. If we do hit 10,000, that would likely just be around some wicks getting to that range in general. If we do end up doing that, I mean, that roughly just lines up with kind of this median area right here of where we could find some sort of support going back to the previous phase of this. I guess technically not, we're still technically in the same phase, but the first half, if you break up the phase 1, as I mentioned in that video uploaded recently, if you break it what we're looking at, the majority of phase 1, if things play out like I'm saying, then it will play out something similar to this, adhering to this fractal pattern. It will come up and meet around 200, as I've been saying. In general, just 200 to 300,000 is a broad range. More likely somewhere around 200 to 250,000. Worst case scenario, assuming we still kind of adhere to the price harmonics I personally see, or that I'm projecting, worst case scenario around 150 to 200,000, 150,000 lining up with this first high, then 200,000 lining up with this second high. I'm still not, as I've said many times, I'm still not entirely sure that we'll get a double top like this one. It's obviously similar to this one back here. I mean, it's also just as likely that we come up to this point right here, just like around 200 to 210,000. We come down, and then we don't actually make a higher high as a double top, but we actually come down and we make a lower low. So it could actually be something more like this, where we hit around 200, 210,000, come down, and we just move back up towards around 170 to 200, not my bad, to 180,000. To further kind of add some evidence and some reasoning behind that price target. So if we go back to the previous cycle, so this is what we're looking at, cycle 2. We see this, as I mentioned in that video uploaded recently, in depth going over everything. We see our W right here, and we kind of fizzle out for a little bit, then we see our lightning bolt. Just to go back up here and just again show it if you haven't seen that video for whatever reason. We see we have to make a W right here, we just kind of fizzle out, and then we make a lightning bolt. It's not perfectly identical, but it is similar enough to a degree, and obviously, as I went over in that video, to definitely warrant the fact that it's clearly just being repeated in a fractal-like occurrence. But you can see here, the second top wicked right up to the 2.321 as a range, 2.321 to the 2.382. Once more, just to reiterate, the 382 is, if you think about the golden ratio as like a coin, one side's going to be the 618, the other side's going to be the 382. They're inverses, kind of like conjugates of each other. I mean, also 618, 0.618 plus 0.382 equals 1. So it's obviously just another clear relationship there as well. And also another thing to look at is obviously we got this kind of, this crazy wick that we saw right here up to just shy of the 1786 at $266 back in April 2013. But you can see how it generally kind of just met this golden pocket zone that I use of the 1.5 up to the 1.618 and the 1.55 being the kind of mid tier level of that golden pocket zone. So we come up to our current cycle of the current phase, same phase would be in. You can see here that the first top up here met the range that I just mentioned right here, this 1.618, 1.55, 1.5 range right here. The first top went just shy above the 1.618, and then same thing for the second top at around $70,000 approximately. So that's a clear repetitive occurrence there in a fractal-like nature. And again, it's taking the exact same retracement from the bottom to the top. So the bear market bottom 2018, 2019 to the top we set in 2017, the beginning of this W, this phase one of this cycle that we're in. Again, just to go back, what I did back here, bottom to the top, meaning the same Fibonacci retracements as well over time. And also, I just want to again further point out this yellow trend line you can see going all the way back to, again, this kind of pivotal point when we kind of got this final major rejection about nearly halfway through the 2014-2015 bear market to this range bottom we set. This would also just be, just to quickly point it out, another area where you could look at this as an inverse bull flag. So we come down, we make this M. Instead of being kind of like a megaphone pattern, this would just be kind of just a flat inverse bull flag, where once we finally break out above this, you can see then we had obviously clearly the bull market that led to the approximately $20,000 high. Last thing to point out here is, as I mentioned in the previous video, there's two scenarios. Either we are similar to going back to, like I said, August, September, we're going to see this final pit stop, this final retracement, which, again, just to point it out, if we are looking similar to this, it's around 21% in a drop towards the downside. If we do something similar to that, that does line up with 24.2, just around 24,000 a product. So meeting that $23,000 to $25,000 range that I mentioned. So again, like I said, if we end up doing that, then this black fractal pattern right here would be what we adhere to. If we don't do that, let's say we still come down, but let's say we head into this yellow range right here, which will be the most likely, the next most likely range we would hit. Then we just consolidate here. Who knows how it's going to look, but then that, I would say that would be the final pit stop before we then move up again in a similar fashion to this fractal pattern that I have on here. I did add these, I've included these trend lines on any chart on the channel before, these red dash trend lines that you can see. So I mean, we could be, let's say that this inverse bullish megaphone pattern that I'm saying ends up playing out, unfortunately. So if it does, and we drop down around 10,000, it would just, generally line up, as you can see, this lower red range that I'm setting. You can see we found resistance at 60 to 64,000, came down. We had this minor resistance right here. Eventually, we did find support. We came up to this upper red range. Then we made this double top. We got a bearish divergence on the MACD and also on this bear bull power indicator as well, which I'll touch on that here in a moment. Also, if I had the RSI on here, we got a bearish divergence. Pretty much on every single derivative indicator you could put on here, there was a bearish divergence predicted for this double top. And then we came down, we formed right here this bearish Gartley, which overall just made this lightning bolt pattern, this ABCD pattern towards the downside. We got rejected once more. So we're seeing 3 points right here, rejection. It was a minor rejection right here back in August of 2021. Then we got this final rejection. You could liken this one all the way back to this area back here as well, but more accurately it would just be this area right here, because like I've been mentioning many times, this right here would be the same type of lightning bolt pattern into this M double bottom, which is what we have seen. If I go up to here, we see this lightning bolt pattern, we see this M right here, and then I personally believe we're already beginning the bull run and we're just continue to go up from here. But I mean, that is, again, just pointing out, it's a possibility that, just to not be overly biased. I mean, we could possibly see getting a massive rejection right here in this area. This would then take us down to around, at worst case scenario, 12 to 10,000 if we even do end up meeting 10,000, there is also just some possible wicks to around like 9.8 thousand. But I mean, like I said, just in general, 12 to 10,000. And then especially if we start to lose, let's say best worst case scenario, we just come down and we test, like I said, around 19.7 to around 18.5 thousand. That would just line up with us coming down once more and testing this yellow support range. This is the longest support range that I've been able to put on a chart. And my looking into it, we could come down here as well and also just bounce back up as well. That would, in general, kind of just line up with a way that the bullish, or just in general, megaphone pattern typically works. If I take this off, so I can show what I mean by that. If we were to come down and test around that 18.9 thousand, that would line up with kind of just coming down to a relative median line, some sort of form of a retracement down. We only would, do this, and we come down and we meet kind of like a comfort zone at around 18.5 to around 19.7 thousand. Then from there we would bounce upwards. Obviously, there's plenty of possibilities here, as I say fairly often. I mean, I could draw an infinite amount of price patterns on here, an infinite amount of different, lines, fractal patterns, different trajectories, and at the end of the day, only one of them is going to actually end up being, it's going to follow through, which is what makes this so difficult as well. And that's also kind of just a principle of quantum physics, quantum mechanics, if anybody's familiar with that realm of study. And whenever it comes to them talking about electrons and things like that, I don't personally view electrons as the way that modern physicists and society does, but that would be typically how it's taught when they talk about point-based free particles in form of electrons and all the other kind of nonsensical particles that they have included on things like the standard model of particle physics. But the other chart that I wanted to go over is this 2-day chart that I've been going over recently. Mainly, I just wanted to point out I haven't used Fibonacci retracements on this channel in like a long time. At this point, I feel like it's starting to encroach upon a period of time where these are likely going to be pretty valuable. So what I have on here is I have a Fibonacci retracement, 2 of them. I have one taken from the absolute bare low. Now, as you can see on this chart, it's printing it at 14.6 thousand to our current local high at around 30,000, 30.9 thousand. I'm taken from the bottom to the top and to the top to the bottom to get an upper price target range and a bottom price target range. We can see that the 1.382 to the 1.618, so a more broader golden pocket, as I mentioned earlier, 382, 0.618, two sides of the same coin, conjugates. Also further affirms 12,000 to 10,000. Specifically, it's around 11.8 thousand to 10,052, so essentially 10,000 on the dot, with the 1.55 and 1.5 being your 10.8 to 10.6 thousand. Also, the 0.618 is lining up with 23.7 thousand, all the way down to the 382 is lining up with 20,000. So again, right there is just further affirming the price target range I've been saying for the last number of weeks, just in general, 23, 24, 25, if it doesn't end up going down as low, and then worst case scenario, or I guess not total worst case scenario, but one of the better worst case scenarios, we come down around the 382 to 20,000 approximately. Whether or not let's say we end up coming down further, we meet any of those possible routes I've mentioned on that previous chart. Let's say that, for example, let's say we're coming down and we're going to bottom out at around 25,000, like I mentioned on my community tab. Let's say we've already essentially met our retracement because we've wicked down to 25.7 thousand at this point. Maybe we're just going to come down a tad bit more and kind of fulfill this estimated moving average band right here, and more so just around $25,000 on the dot, with, like I said, possibly seeing some wicks around 24.6 thousand. So I mean, realistically, if that ends up playing out, the retracement's essentially almost borderline already over. So if we do end up doing that and we eventually do get this bounce towards the upside, like I said on the previous chart, either we are seeing in this final pit stop, this final retracement before we meet this, this fractal pattern right here that I mentioned of this upcoming bull market, the one that I see as being most likely. If we don't end up doing that, we come down a little bit more, or maybe we bounce from the low that we've already set right here at that wick I just mentioned, and we bounce up to this range right here is going to be the most likely. It's the the upside, a golden pocket range, and then I deviated a little bit lower down to the 1.272. As you clearly see back here, it also just lines up with the kind of the median of the consolidation we set from around 29,000 to the 70,000 back here during the onset of that bearish divergence leading to this bear market we have been going through for about a year and a half, 2 years at this point. So the 1.618 lies at 47.6 thousand, the 1.272 at 37.3 thousand. So essentially we're looking at a $10,000 range if we still have one more upside an upside relative high to make before. Let's say that we do end up doing that, and maybe we'll come down a little bit more, maybe not. Then we'll go up. That's right, I can't draw because currently I'm not connected to the internet, but my charts are still here, so that's all that matters. Anyways, whether or not, we come down a bit, we come up and we consolidate for some whatever time in here. Also, I mean, this is generally kind of just lining up with this right here, so we could kind of meet this lower price targets, depending upon whenever we do it, whether or not it's around June or July of this current year. I mean, we could come up and want some more just to butt our heads on this upper resistance of this megaphone pattern that I've been pointing out recently. But that was really all that I wanted to go over in this video. Given that my Ethernet cord is being stupid right now, I'm going to forego going over just go ahead and including that second part of that in-depth phase cycle video that I was talking about. But outside of that, hopefully you enjoyed the content. Hopefully you took away something, you learned something in order to apply to your own trading scheme. Once again, the channel is not meant for financial advice, but I'm just simply giving my ideas and my personal view of the market. Outside of that, everything being said, I hope you all have a blessed day. All right, so I forgot to add in those indicators that I said I was going to add in, because whenever I record these videos, my mind's an echo chamber because I just freehand it. I don't have a script or anything. But anyways, what I wanted to go over is this right here. So this indicator that I just recently started using, it looks nearly like borderline like an RSI to me, but it's known as a bull bear or a bear bull power indicator. As you can clearly see, we recently just broke out of this clear resistance line right here going to the double top that we set. Clearly you can see we got a bearish divergence on both this MACD and this indicator as well. So as I've been saying, what I'm leaning to right now is that we're basically looking similar to, if we go back to this right here being the March crash, and then right here was this build up point that we got that I encircled. You can see that the overall slope for the support here was negative, so we could likely end up seeing something similar to that, and we'll actually see this come down, continue to go a little bit lower, and then we'll retest this, and then we'll bounce up from there. We will see a hidden bullish divergence there. As you can see, the price up here had an upwards support, a positive slope for the support, and then down here, obviously, like I mentioned, had a negative support, negative slope for the support. So right there, again, just being another indicator that I've never used, just kind of further confirming at least a more of a likelihood towards the fact that we're most likely, in my opinion, to try not to say this as unbiased as possible. I don't personally think we will get this massive dump. I don't think we'll head lower than 20,000. I still think that 20,000 is likely as a major scare tactic to wash a lot of people out before things do ramp up to a very bullish degree. But overall, I personally just don't really see this, this green pattern that I mentioned playing out. I do want to go over this MACD real quickly, because this isn't typically the MACD that I use. I typically use the one that I have on this chart, which I'll go ahead and update this one, because why not? I've had this drawn in here, this kind of borderline symmetrical triangle that's been forming. You can see quickly it's drawn on here. We've kind of just been volleying the overall the momentum of the pressure the price has been building up. You can see we've been in a bullish divergence ever since the local low we set back in May of 2021, going back to 2028 to around 32,000. Again, when we ranged from around May to June, July of 2021. And now we're finally starting to reach this upper resistance recently from the beginning of this year to March. We've set this these two tops right here, which I believe is just similar to what we see, you know, right here, right here, right here, right here, right here, and right here. So again, like that, we'll see either anyway, I think worst case scenario, we would do something like this, and then like absolute worst case scenario, we'd come down and we'd do something along that line. Although I think if we end up coming down, we meet this once more, then I think, I mean, personally, I mean, obviously I don't know, but I feel like that would more so adhere to coming down to like breaking through 20,000. Not necessarily meaning we'll go down to, you know, like I said, 12 to 10,000, but I think if we end up coming down and we meet this pink range, this pink support again, then it's likely going to line up with coming down to at least 20,000. And then, like I said, maybe even we'll see some wicks down to 19.7 to, at worst case scenario, 18.5 thousand to just further retest this range right in here as just a massive scare tactic, a major washout. You know, if you want to look at it in the whole whale context, I typically try not to talk about that because I feel like it's just kind of stupid. I mean, my personal opinion, I'm not somebody who kind of holds a market maker view. Obviously, the fluctuation of people buying and selling throughout a period of time, throughout a history of something's chart, is going to, it's going to dictate the movement to a degree, but I feel like, especially, and I'm just solely talking about Bitcoin here and cryptocurrency in general, but again, mainly just Bitcoin, I feel like the mathematics associated with Bitcoin's its blockchain solution as a whole, its protocol, and the way that it's programmed, its mining process, I feel like that, and like again, like the fundamental, the inherent mathematics behind the functioning of this technology, because that's what it is at the end of the day, is more it has more of a contributing factor to where the price goes. So the way that I see it is I personally would just, I'll just throw out some numbers to get my point across. I would personally allot an approximate 70% of what drives where price goes for Bitcoin is the mathematical protocol, the mining, etc., more so objective things, and then around approximately 30% can be given to, you know, wells selling a lot at a given time, or just the general fluctuations of people buying in and selling throughout a period of time. Obviously, everything in every market is manipulated. I just personally feel like, obviously, I feel like that's just that's the point of blockchain solutions, especially Bitcoin. I feel like it's not going to fully get rid of the manipulation, but like I said, that kind of 70-30 at the worst case, 60-40%, 60% of it's dictated by the mathematical protocol, etc., and then the 40% is dictated by people buying in and selling, and then wells dumping a lot at a given time. And then obviously there's black swan events. So, you know, obviously bad things happen in society. For example, back here leading into this March crash, lined up with the COVID pandemic, I'm sure a lot of people probably, you know, sold during that period of time, or perhaps not. I mean, at the end of the day, I mean, like I say, nobody really knows what's going to happen. I mean, this price trajectory is just as likely as every other price trajectory I could draw on here, which, like I said, is an infinite amount of different paths that the price could possibly take. At the end of the day, only one of them is going to be taken. There's no real way to find out which one's going to be most likely. You just got to hope that the human intuition that we've been given ends up being correct in the long run. But outside of that, that was just what I wanted to quickly add in here, because I forgot to go over those indicators. But everything being said, once again, I hope you all have a blessed day.
Now won't die. See you forever, start to